Welcome to the Trading Lounge and the day ahead report, and here we look at the S&P 500 on hourly chart, and as you can see it's broken out of that narrowing channel there based on the 1400 of support. The ECB offering more detail of their support for the euro, and also there was positive figures in the ADP employment last night too, which would price in another positive move on Friday night tonight in the US for the non-farm employment there as well. So, but in the wave count here, as you can see here, we're looking at counting 5 waves up, and we can see obviously that there's a nice strong third wave here, so that would be the center of the structure. So this section down through here really needs to, if you flip that on its head, that will be the 3, 4, 5s coming into this way up here. I'm looking at the 144 here. It's a place that Gann and Elliott meet, and also the 72 number as well is in there as well. So, but anyway, that's what we're sort of looking at, and most countries are like this. The currencies haven't moved as much except for the Australian dollar. But they've, we'll get to those in a moment. But look, that's just the general picture. And when we look at the Dow Jones, it's pretty much the same as well, as you can see here. Now, what it is doing here, it is creating a double top over here, and double tops are never the end of a bull market going to the upside. So I think that's going to be interesting. And it's also the top of Group 1 as well, the 13,300, the 100, 200, and 300. So we'll see how we go with that and see what support's going to hold on there. But as mentioned, when the other day when this because our sort of bias, even though we're getting nervous, our bias was for a break to the upside because we'd seen this as a corrective move and so forth. So we expected this impulse wave here to last a week. It has travelled quite quickly through here, but it should take us through, to mid next week there in terms of we will be seeing, corrective activity here and edging higher through here as well. But, the double top's really going to sort of pin it there, and that's the same for the DAX too at, just have a look at the DAX here. Just come back in here. The 72 here is the old high over here somewhere, yeah, right on here. So that's also going to cause problems over there. But once again, we're looking at the 5-wave structure up through here. Now with the DAX, I don't know if we've got the 5 waves from this point here moving up, or we've actually got it from here, the 1 and the 2 here, and then a 1 and a 2 and a 3 here. So a slightly different possible count there for that, where the FTSE is a completely different market, as you can see, because of the long move down through here. And let's just see how we go with this as well. But what we will do in the interim is just you need to count these 5 waves up exactly the same as we've got on the S&P 500. The supply is over here. The price seems to be slicing through that okay, but there will be corrective patterns in terms of the wave count coming into the 5.8 through here. So we can expect it to hit the 5.8, come back and retest this as well, find support, and then push up through the next level of supply here into the 58 subgroup 1 here, 10, 20, and 30. So yes, it will edge higher, but there will be sort of swings in through here in terms of 4th and 5th series of 4th and 5th waves moving through there. The Australian market as well has followed suit up there. Now with the Australian market here, it does count as a I won't confuse it too much, but I think it's worth noting that the SPY and the overnight market here from the cash CFD counts as 3 waves down in terms of 1, 2, 3, 4, and 5, and then an A and a B and a C, and then the C down here. We were talking about that being a low there yesterday. But when you look at on the cash market here, on this one here, it's the same in here, but it does seem to count quite nice as a 5-wave structure in terms of the 1 and the 2, the 3, the 4, and the 5 down through here. Now, this is obviously working across the 4-3 here as such, and the pattern that we've been over this before, but this is the kind of pattern that we're expecting through here. Won't be that sort of situation there, but it'll be something like this here, where we have this this 5 waves here. If it's only 3 waves here, then we'll be getting an impulse wave straight up through here. That's what we'll be looking for up there, looking to the 4,500 up there. But if that's not the case, then we'll be looking at a 3-wave price action coming through here in terms of 3 waves here, then another 5 here, and then a push up through here. Now, I don't know the answer to this one, so we'll just have to see how it plays out. But that will take us through. That will take us through to early next week as well through here. So still plenty of time for being on this side of the market, which we can enter today. But the trouble is that the US markets are up over 1.5%, close to 2% or above 2% in the Nasdaq, and obviously that's going to cause gapping. So be very careful about that. You'll get caught in the gap, but it should push up on Friday afternoon and also the Monday as well. So you don't overtrade, because you'll get you'll be sitting there for a while. So try and find stocks that that are not going to gap. So there's a bit of technical work inside of that. Okay, let's have a look at the commodities. This 5-wave structure up here is the same for the S&P 500 as well. Same, you just revert that to here. I'll do some work on that this morning though, and post that chart. Just starting with copper here. And it is testing support on the 350 here, which does give it a positive sign. We can expect more corrective pattern to be here. This can also be the top of the whole rally that we've been looking to the upside as well. So it'll be interesting to see how this pans out next week. So not a lot to sort of say here. Yesterday we were looking at US BHP around at the 65 level being down here, and we mentioned that it will be coming back to retest that, and which it's doing at the moment, and that's going to be positive as well. So let's just allow that to flicker around through there for a while to see what we've got there, because it does appear that we've got a 5-wave structure down through here. And if that is 5 waves, then we'll see 3 waves back up, and then we'll see further downside, because we're looking at this being a corrective pattern through here in terms of an A and a B and a C wave. The C wave can be from this point here, I think, or from this point here. Not that it matters that much, but so we could be seeing further weakness in this, and that copper price would, if that's topped out as well, then that will be doing that. So when we look at the copper price in a bigger picture here, it's this one here that we're talking about. So we're looking at this as a corrective pattern through here. Yes, it is the same pattern as gold through here, and gold has pushed fair way up, but copper hasn't done that, but it could do. So that 350 is the line in the sand. That will really give us. That's a good thing about using price as support and resistance. It really gets you it keeps you on the right side and takes you out of, if the market's wrong. So it's just a matter of working out support and resistance, and that's exactly what we're going to do here. So let's just give that a little bit of time there. Switching and having a look at gold. Precious metals here, it's moved up through here. So in one way or another, it can certainly have a top in play here. Of course, I'll be looking at the 72 number up here, but it's really going to be working with, as I mentioned the other day, it's either going to pop back to the 1680 and then push up, or it's going to push up from the 1690 here. But even if it does push up, it's not going to go that far, because it's going to be sticking to the 1700, so we're not really going to be missing much at that stage there. So not a great deal there, but yeah, the oil market. Well, that's fallen out of bed, which is a bit in line with my thinking actually, because when I seen it this morning, it was sort of up here somewhere, at 96, I think. So, but the reason I was going to sort of go to sort of the bearish side of it was because of the Brent. And when I look at the Brent here, we'd been pulling this chart in and talking about it, and we were looking at this being an A and a B and a C down here, and then we're counting the little 5 waves up through here, and that would have been nice if it made a new high up through here. It's just a little bit shallow, but not to worry too much. But while this market didn't have support on the 1150 here, then it's got a bearish side. It's not to say that it doesn't, but if it takes this low out through here, then it's a real sort of bearish picture through here, and we'll be looking at a top here, and we'll be looking down for 1 and back for 2, and in the beginning of a third wave down. But let's just see how it goes. If it takes this 11.2 out here, then we've got a much larger correction happening here, and that's what I was going to say before this actually bolted down through here like this. That there is a there is a bearish sort of picture with the Brent, but we would stay positive on this market here while this support line through here in the 95 stays intact here, because as you'll see on our charts, we're looking at this in being a bit of a triangle pattern through here, but once again it will follow stock as well, but it's certainly been sold off here. I don't know the reason for that, I haven't had time to check that, but let's just see how that deals with the 95 through here. But if it breaks through here and then finds this trend line as resistance, then there's problems in paradise then. Okay, let's have a look at the currencies. Okay, looking at the US dollar here on a weekly chart here, we've looked at this before, but just pointing out that we're on that weekly trend line there, so it is getting support there, and even though we're expecting the price to move down to the 80 here, it's reluctantly not budging. So as you can see here, because the stock market went up and the euro went up, and we're kind of expecting the euro, the stocks to go up, and also for the dollar to push down. But as you can see, the US dollar is not pushing down. It's not to say that it won't, but it certainly hasn't at this stage. So there is a lot of support there on that trend line, so to speak. So we need to respect that. But at the same time, we wouldn't go long unless we had support on the first level here on top of the 81.30. So we need to bear that in mind. So we'll just stay clear until we've got that sorted out. But just to point out that there is support there, and that's really going to prevent the euro from pushing up unless we get a nice clean break to the downside. So in looking at the euro as such, it's a bit of a tricky one, because I can see that these waves that we're getting here, that's in 3 waves, this one's in 3 waves, this one's in 3 waves. So we're getting these sharp pushes. We're getting these sharp pushes up, and then the 3-wave correction through here. So we may get that again through here, but it's not a very good impulse wave to the upside as such. It is a trend to the upside because we've got 3-wave corrective patterns happening. So they are corrective, they're bullish patterns, and we're also getting the 5-wave impulse waves up here. So we are going up, but it's just not doing it in the right sort of in the right form, I guess. So it's not the right look and feel about it. So there is something sort of dodgy there. And in terms of the bigger picture here, if I've got the bigger picture here, just bear with me here for a second. Okay. So, our point was that, we are looking for a wave 4 up through here to come to the wave 4 of 1 lesser degree here. That was our sort of targety thing. And while the 125 was support, well then, we would sort of head in that direction, and we've done the right thing, and it is edging up there. All I'm just saying is it doesn't really have the right look and the feel of an impulse wave pushing to the upside. Even though it is impulsive, it's more like corrective impulsive to the upside. So and the US dollar reluctantly pushing to the downside, not pushing to the downside. So there is and the stock market, the S&P 500 pushing up so strongly, and the euro not following it. There is a real reluctance for this market to go up and the US dollar to go to the other side. So I think you need to take that on board in the sense that, you do not want to overtrade on the long side for the euro, or the downside for the dollar, because it's got that presence of pressure and a turning point within range. So we just need to be treading lightly through that. So yeah, just be aware of that. It's just a little bit tricky to count this coming up through here. I mean, it counts quite nicely to here, and this pulls back. But yeah, the upside targets here would be all around the well, I've got for the sort of total. To me, once it's got support on the 25, then we need to look at the 28. That's how I sort of see things. So the halfway mark between, that's another point, the halfway mark between the 125 and the 128 here is the 126.50 where it is here now. I call that the 65 number, and it's just like we've been looking in oil at the 96.50. So it can pack a bit of a punch there. So in terms of trading, that this could certainly come back and correct in here, but by all means. So there's a 26.50 here. It's playing out its resistance. If it becomes support, then it'll separate itself from the 126, and we can start looking at the 127, 127.20, and the 1.772 area, but and also on an intraday level as well, is you can see that it's retesting the subgroup 1 here, the 10, 20, and the 30, so the top here. So look, it can come back down to the 2 here, the pivot within group 1, but if it finds that as resistance, then it's doomed at that stage, and it will work lower at that stage. But if it comes down, it can spike below the 20 and so forth, but it comes back up and finds support. That's good. Then if it finds support back up on the top of group 1, then you can look to go to the upside from that point there. So all I'm saying is that the 125 is the main support. Then we've got a retest in here for subgroup 2 here. That's the next support. The 126 hasn't been supported, retested, and the 30 here is in its initial stages here as well. So and it's likely to correct back in because it didn't really push up and make new highs as such. So there is pressure there. So you just really need to drill in there and ask yourself, has the 126 been tested as support, or does the 30 have support there? The Australian dollar is pretty much doing its thing here. We're looking for the low of the third wave yesterday, and as you can see, the sharp move back up through to here. We could start to call that the wave 4 coming into here. Let's take a closer look at that through here. So let me just see here. I haven't done a lot of work on here, but so this is wave 2 here, and this is wave 3 here, and I'm not really sure about that either because it doesn't count very cleanly down through here. But if that was the case, then would be the natural thing to do would be looking for a 38.2 retracement level, which, as I mentioned in the report this morning, it's just around the 103 here. What is interesting here, though, is if that's the 38.2 retracement level, that would make that the fourth wave of one lesser degree, I guess. So, but this gap in here is the thing. So the 103.30 would be a point that we would be looking to work towards. So that would be the little gap in here. So that you need to be mindful of that. As we mentioned yesterday, that this little pattern down here was corrective, and we should be pushing to the upside. We did, but if you did, then it had that spike here, unfortunately. But that's the life within the Forex paddock. So, but look, it has pushed up. So now we need to spend a bit of time working out the particular structure up through here, which would be pretty close to the S&P 500 as well. But we'll drill in and have a closer look at that. It's moved quite swiftly through the 102.72 here. But it doesn't mean it's the end of it, and it doesn't mean it's the end of it for quite a while here, because the way that I see it is basically this is such an important number. The swing that it's had down through here, as you can see, it came down, hit it, came back up, and really been sort of working it. So I can see that there's going to be a bigger pattern in the future here across this 102.72. It's going to become more important as it goes on. This is just like the first leg through it. So will be interesting to see how that pans out there, but we need to work out what this leg is here as such, and I just really haven't had time to move in and do that just yet. That's what we're looking at yesterday. So it does seem like a little 5-wave structure to the upside just briefly here in terms of the 1 here, or even 1 to here. A corrective wave across here is wave 2. A wave 3 and 4 and 5 up here. So this can just be the A wave to here. So if that's just come back, sorry for doing this in this time. So this is likely just to be the A wave here. Then there would be a B wave in 3 waves at some. Draw a line here. I might use this multi-line tool here. So somewhere there'll be an A and a B and a C across here, and then there'll be a C wave here. 1, 2, 3, 4, and 5 here, which would make the other wave here. So that would be the B wave here. It may not be in this particular. Don't take these price points as gospel, but we would be looking for something like this here. We'll get a better track on it, but that's what you're looking at here. Once that's completed, then we'll see another move to the downside. Alrighty, well, that's it. So just recapping a little bit there, looking at the S&P 500 and the Dow and so forth. We should be seeing more upside into sort of Tuesday, Wednesday next week there. Yes, there will be pullbacks and so forth, but it should be a steady ride up there. Yeah, just try and find stocks that are not going to gap too much on the open. So we'll have to go for following stocks rather than leading stocks. We got into CBA yesterday, which is something. We've got a few sort of longs in there, so which is something. But let's see if we can get a few more. So we can expect Friday and Monday, Tuesday profit taking, and Wednesday a bit of a V-shaped day where there's more profit taking and so forth. So we'll get around to the Wednesday high if we can. Alrighty, well, good morning and good luck.